Welcome to this week's weekly technical analysis for July 29th through August 2nd. We'll be taking a look at the TSX, Focus 5 stocks, silver, gold, oil, and a few of the commodity ETFs. Let's take a look at the 3-year weekly chart of the Toronto Stock Exchange. As you can see, it came down after 5 weeks of climb. It came down this week, and it looked like it closed pretty much exactly where it opened for the week. So there was some movement, but again, it closed where it opened. Not a lot of momentum is showing for growth. We're in the period of earnings, so that obviously had something to do with it. But again, looking at the MACD, I gave it a blue circle because the signal line and the MACD are on top of each other, and it looks like the histogram is pretty much at 0. So everything is flat at the 0 for the MACD and the MACD histogram. RSI is showing flat momentum, and the stochastic is showing a cross down. So with the negative cross down, we see the momentum is leaving the index, but that is mainly due to this downside being greater than the upside. Again, quite range-bound. TSX has been for the last year. Started at 11.5, comes up to 13, comes back down to 12. So we've seen the 12,000 mark be more of a support. More recently, the 12.5 mark has been a greater support line. And you can see it came almost all the way down before going back up. So that's something to take a look at. As you look at the 6-month daily chart, you can see that it started off higher, or it closed. The close is close to the open here on the Monday. Came back down, broke through the 12.6, pretty much did the 12.5 here at the low, and then closed above 12.6 again. MACD showing a negative cross here, but that could change with momentum coming next week. But the negative cross here in the technicals and the histogram bars are steadily shrinking in the last 2 weeks. Momentum, we have a blue signal here because even though it did cross on the stochastic, it's plateaued right away, as we saw the cross up here. RSI, I would have given it a green, but again, we see the plateauing of the momentum. So there has been some movement in the market itself. We saw the Focus 5 all report day, or this week. So that's very important in terms of how the stocks are going to react. Momentum, like I said, is flat, and that's probably due to the upcoming long weekend. And again, we see with the long weekend, trading tends to peter out and volumes will be lower on the Fridays. And you can see the bar for Friday was very, very small for the TSX. Taking a look at oil. Over the last 6 months, you can see here the 6-month chart, the 6-month daily chart, and oil has prices peaked again, couldn't break through past this 108 mark and came back down. So again, we may see dip below 105, but again, 1, 2, to come back down and turn back up. Over the last 6 months, oil has increased by $8.81, or almost 9%, as you can see. But with this decline here, it's still eating up some of that growth. What it's good to see is that we're back up here, as energy producers will be able to benefit from higher oil prices. Taking a look at the 3-year weekly chart for Enbridge, again, a very short week in terms of movement, but it's good to see that it closed higher than it opened. So there was strong momentum throughout the week. The MACD has definitely started to turn higher. We're heading towards cross, but there's still, I would say, 2, maybe 3 weeks away before that occurs, if things stay the way they are. Again, we touched the support at $45 here before bouncing back up, and it's a good sign that we've touched it 1, 2, 3 weeks in a row and haven't broken through. Good sign with the momentum turning up, and again, momentum turning higher here. Lots of room for it to grow up to 47.50. So if you haven't gotten in yet, again, now might be the time to get in as it's gotten off its lows during support. Looking at the 6-month daily chart, same picture in terms of the indicators. We have the MACD. It did cross down lower, but again, very, very close to turning up on the signal line. You can see the histogram bars are shrinking, which is a good sign when it's in the negative side of the zero line. So this is the zero line here. Negative side, we want to see it shrink and continue to expand on the positive side. Closed higher than it opened on Friday, a good sign. We touched resistance at $47. Wasn't able to break through over the last couple of weeks. So it looks like there is a bit of room to get in, 50 cents worth approximately. So if that's what you want to do, or you want to wait till it comes back down, that might be a bit more of a prudent move. But looking at the momentum is there. Strong on the RSI, strong on the stochastic. A definite crossover here, so probably on the Wednesday, and then nice deep growth. So you see it break through $47 after the earnings report. You can check out the earnings report, which came out on the 1st actually. So on Thursday it came out, and so obviously the market expected some good things, and it got good things with it closing higher on Friday. So read the earnings report, the quarterly report that came out, and do your homework. But just on a technical side of things, it looks like Enbridge may be going for a run again if it can break through the $47 mark. 3-year weekly chart for IMO, not what we wanted to see. Even though it did close pretty much where it opened, we want to see this trend close up here instead. 3 weeks of falling closes, not necessarily a good sign that we want. We can see that the momentum is pulling away from IMO as we come to test this 42.50 mark for the lower end of the range. Looking at the MACD and the MACD histogram, while the MACD is positive, the histogram bars are fairly the same, showing that the convergence divergence isn't changing. I would expect if this trend was to continue, the MACD would turn lower, and that would signal it's time to get out from IMO. If it's able to break through the 42.50, the next level of resistance is $40, and then obviously 37.50. So there is some downside risk to the stock, and even though it reported again on Thursday, markets weren't too happy with what it said, and you can read that for yourself. As you can see, here is a 6-month daily chart. Monday, Tuesday, Wednesday, great numbers, expectations for IMO, and then Thursday, it sold out, and Friday closed higher than opened, above the 43 mark, which is good. Looks like there was definitely some overselling here. It's a bounce back quickly on Friday. I would expect it to reclose its 44 gap during the week next week, even though it's a short week. MACD and the MACD histogram are showing this drop here on Thursday. Crossover on the way down back here, but we have a definite decrease due to the Thursday decline. And as you can see, momentum flat on the RSI, and stochastic, which is a little more sensitive, definitely showing red. That being said, could things turn around in the next few days? More likely than not, it will. If IMO were to continue to fall, it would have fallen today on Friday, and we would have seen it test $42. So it closing above 43 is a great sign. Should see some strong momentum next week. Here is a 3-year weekly chart for Suncor, and now Suncor reported on the Wednesday, and if you look at the bars, it closed much higher than it opened. A great sign. We have strong momentum here on the RSI and stochastic. More importantly, on the lengthier chart, we see the histogram bars are increasing, and the MACD is on the positive side of things. good signs for more growth in Suncor. Remember, it looks like the 35 mark here is the resistance point, and it's come up there 1, 2, 3 times and hasn't been able to break through. The last time it broke through 35 was March of 2012. So that was a while ago. And this year couldn't do the same. So we have to be careful not to get too caught up. But again, with the indicators telling us that Suncor is looking good. On the 6-month daily side of things, it reported on the Wednesday, and Thursday it shot up, hit the 34. Friday shot up, tried to break through 34 again, couldn't. Last time it was at 34 was before March of this year. So that was almost 6 months ago. It was at 34 again. So it's tried to get there, but just hasn't had enough momentum to be pushed. Could we see it break through 34 next week? My expectation is that it might pop its head through since it closed higher than it opened on Friday. It might stay there for a day or two and then come back down as investors cash out. Looking at the MACD, very high. We do have a crossover due to this strength over the last 3 days. That's a good sign. The divergence is increasing, went from negative to positive. Good sign. If we do see Suncor able to break through 34 and hold above 34, it would push it into the next range of support and resistance. RSI is flat, but still at the 70 mark, which is good. And more importantly, you see the stochastic pushing much higher here, jumping a very steep rate, and that's due to the growth from Wednesday to Friday. The momentum is with the stock. If it breaks through 34 and stays above 34, we could see some good things coming through. Royal Bank, 3-year weekly chart, broke through 65 again and then closed lower than 65. Momentum is pulling away from the stock. Royal Bank did report on Wednesday, and again, didn't look like things were what investors wanted. Here we have the MACD with the crossover on 3 weeks ago, and we've seen this convergence and divergence continue to increase on the positive side. That's what we want. However, on the momentum side of things, beginning to fall. And that's to be expected as we posted new 52-week highs over the last 3 years. So it's expected that profits are being taken, investors will ride this down, probably back down to the 62.5 mark over the next week or so, and we'll see what kind of momentum they're able to come and test at the 62.50 mark. The 6-month daily chart, we can see the Monday, Tuesday, Wednesday, Thursday, Friday. Thursday, Friday, we had pretty much identical open and close here. So that's a good sign that it did close higher than it opened on the Friday. We do have a MACD crossover, and the histogram did head lower. It tested the 64 mark, but closed much higher. We do see the momentum coming back here with the crossover on stochastic and the uptick in the RSI. It could, again, break through 65 quite easily and stay between the 65 and 66 range. But again, we'll have to wait and see what kind of momentum occurs next week in the shortened week. TD reported on the Monday, and it closed pretty much at resistance at the 87.50 mark here. 1, 2, 3 weeks of growth. We posted a new 52-week high, broke through, and then closed around the 87.50 mark. A lot of movement, a lot of momentum. The MACD is still in love with the stock. Histogram bars are increasing. Good sign. Momentum, however, is pulling away. Taking a look at the 6-month daily chart, it did break through 88, 89 almost on the Monday, Tuesday, Wednesday, Thursday, Friday, we had a bit of a turnaround. So momentum is with the stock. I'm expecting, if momentum continues to stay the same, for it to break through 88 again sometime next week, and the MACD will probably flatten out and come much closer with the signal line, and the histogram bars will probably shrink until 0. Banking sector is going to have to find different ways to generate profits, but again, you can check out the quarterly reports to see where things are going. Here is the price of gold. It has fallen $21 or 21.4% over the last 6 months. We've definitely had a bit of a rebound over the last couple of weeks. This is a 6-month daily chart. Even though it's fallen over $350, the last couple of weeks from this 1200 mark, we've seen it rebound. It tried to break through 1350, couldn't, came back down to 1300 and turned up again. So could the new range be 12 to 1350? Possibly. We do see some strengthening in the gold price itself, and that could create new momentum, especially as things in Europe continue to weaken. China continues to weaken. Even though the U.S. economy has posted good numbers, it wasn't as good as people wanted. So again, the price of gold will increase. Taking a look at CGL, momentum moving away from the stock. You can see a slight decline due to the actual bullion price declining as well. MACD is still positive, but it's turning down. With the gold prices unable to break through that 1350 mark, now might be the time for it just to wait and let the bullion fall a little bit further before getting in. For the ETF itself, a price point closer to 11 would be great. And I mean, it wasn't that far ago, maybe two and a half weeks, that it was at $11. So 11 to 12, that's a full dollar. That's an easy dollar to make. So that's something you can be interested as well. Here is HGU, the Gold Bull Plus ETF. Had a nice run up as gold continued to rise, but then slowly declined as the bullion price fell as well. MACD, the MACD histogram are all really at that 0 point. If gold turns up, as we saw at the end of the week, this ETF will turn up higher as well. The momentum does look to be moving away from the ETF, and that's due to the gold bullion price falling. But then again, things can change very quickly. HGD is the Gold Bear Plus ETF. As gold prices increased, the ETF fell. As gold prices decreased, we began to see an increase. So if you had gotten this around even the 1750 mark here, is the next level of support. If you got it anywhere under 20, you made a couple of bucks this week. 1, 2, 3, 4, 5. Here's the Monday. Here's the Friday. Something you could be interested in. Momentum definitely with the stock. We do see the MACD almost at an inflection point here, and we see the MACD histogram almost positive. If gold bullion prices continue to rise, you will see this ETF turn down. So if bullion prices continue to fall, and we don't see that momentum follow through next week, the ETF will rise. So it's something to look at. We have not a lot of space to make the next level of resistance. That could be something you want to wait for and keep your eye on for the next round of movement. Looking at silver prices, still very flat and very depressed. It's fallen 37.5% over the last 6 months, or almost $12. So there's not a lot of movement in the silver markets. And as you can see, the bullion price, all of July, it's really stayed around the $20 mark. Went a little bit higher, went a little bit lower. Not a lot of movement. Not necessarily an easy way to make your 1%. Might be something you want to use for inflationary. Maybe stash a few percentage of your capital in some of these ETFs. Now, this is SVR, Silver Bullion Fund, and as you can see, not a ton of movement at all Beginning of July, it was about 11, ended up around 12, 11.50. So not a lot of appreciation. You could have sold it at the 12, but had a tough time breaking through and slightly came back down. MACD, the MACD histogram, again, fairly flat. It is negative, waiting for, or it is positive, but on the negative side, waiting for it to really move. But until silver prices move, can't really expect a ton of capital appreciation. RSI, again, flat, just like the bullion prices. And momentum here is moving. Did see that slight dip and turn higher at the end of the week. But again, not much room for it to go anywhere. This is HZU, the Silver Bull Plus ETF. Right there at $8. MACD looks good, momentum is good, and RSI and stochastic both are trending higher, but until that bullion price moves significantly either way, you're really not looking to trade this actively. It's more of just kind of a set it and forget it, because you aren't seeing any movement over the last 2 weeks here. A lot of small price bars, low volatility as people wait for it to move. And here we have HZE. Again, you would expect with the Bear Plus ETF to see a lot of movement, but that requires the silver bullion price to move, and it really hasn't. MACD, well, again, nothing fantastic. It crossed down almost at the beginning of July. The bars are shrinking, but momentum is leaving the ETF. So is there a ton of movement? No, not really. Anytime you get it below 9, it looks good. But again, silver just isn't moving in the same amount that gold is, or even oil. So with those prices being fairly flat and depressed, this may not be the time to be looking at silver at all. So there's my email. If you have any questions, concerns, comments, please let me know. I would love to hear from you. Check us out at www.traintoinvest.com. We're an education company aiming to help you self-direct your own investing. Look us up, read what we're about, and shoot us an email, and we'd love to chat with you. So that's it for us this week. For those of you in Canada, have a great long weekend. Enjoy the sun. And for those of you who don't have a long weekend, I'm sorry, but have a good weekend as well. That's it for us. Bye now.
The organizer has